We're back! What up everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about how to hold your swing trades longer in the market. So stay tuned. Also, if you haven't already, go ahead and subscribe to this channel right now because we always leave out free content. And if you have, we love you and we thank you for staying in this channel.
I'm being serious.
Also, I want to make a major announcement, guys. I do have the Discord up and running, so that's great. I discontinued the Discord a while ago, but now we're back ready and strong to support and help everybody in need in terms of our services. And for those that are asking about our online course is right now on the Discord. We discontinued our website, but everything is on the Discord right now. Okay, that means our online course, which is the Academy, the PLT theory, our trading strategy, and also the supply and demand strategy. So go ahead and check that out, guys, and the link in the description below. We'll see you there. Let's get on with this video. Alright guys, so in this video we're going to talk about how to hold your swing trades longer. Alright, so there's only one method to this really, and this is the one we always use. So I'm going to start talking about sort of the theory behind how market structure works, because in order to know the theory behind how market structure works, you're going to understand how to hold your trades a bit longer. Okay, this also involves a little bit with managing a trade. As soon as you enter in a trade, this involves in terms of how to hold a trade longer, right, based on structure. So just so I can explain the theory behind how this works, I'm going to show you guys here. Okay, so if we have a high and a low, let's picture this as a daily high, daily low. Okay, and price breaks the high like this. Okay, what we're looking for price is we always wait for prices to go back bearish after prices breaking a high, just like this, right? So we're going to wait for price to come back like this to mitigate a demand zone. Okay, something like that. All right, and so the main, let's talk about the theory here. The theory goes as this. All right, whenever we're looking for prices to come to a demand or supply zone, we always look for what's called a weak supply, strong demand. Others can call it a weak high and a strong low or whatever like this. But I think in order to understand how price moves in theory, I want to understand where the weak buyers and weak sellers are at all times, so that way I can take an advantage of price coming back and retracing back to that area. Okay, so in this case, this is a weak supply, strong demand, and one thing we want to do is whenever price, and we also need to understand this, that price is fractal. Okay, so in theory, whenever we're buying, right, in theory, when we're buying, we want to be targeting a high. Because why? Because in theory, prices always reach a high or a low. Anytime price breaks, when prices are pushing bullish like this, they're always tending to break a high, right? An old high. Same thing goes when prices are going bearish, right? They're always tending to break a low. And that's obviously nothing new, but for those of you that are, beginner traders, this might help you a little bit. But for those that are advanced, we're going to talk a little bit about some of the advanced theories behind why price does what it does, right? So you guys can understand how to hold trades a bit longer. So once price retraces here, right, make no mistake that price is fractal. Okay, and this is, I'm just going to paint this out, but I'm going to say that this is a major low, major high, right? This is your daily low, daily high. Internally, we know that there's internal structure that happens, right? Something like this. This would be considered our minor high, minor low, and sub high and sub low structure, just like this. Okay, so once that's happening, right, we need to understand that whenever we're looking to buy at a daily low, right, and holding the trade at the main daily high, that we know that in theory prices should reach this high, right, in order to break either a new high or whatever, at least to reach the high, right, at minimum, right? But what happens when we're looking to enter the daily low here, and we have supply coming in here, right? There's a supply zone, excuse me, just like this. Actually, maybe I'll just do this. Okay, so we know that when we're buying from a demand, we have supply in our way right here, right? We have supply has been bearish for quite some time, right? You can see all that, right? A lot of people start getting nervous and a little unraveled based on this next supply zone, right? A lot of people are waiting for a chalk boss, right? That would be taking out the low, then taking out the high, then entering from the chalk perspective, right? This essentially shows you that prices can reverse, right? But what happens when we do, okay, let's just say we wait for this chalk, right? And price does break a high, just like that, right? Well, what happens next? We have this supply in our way. We have this supply in our way. We also have this supply in our way. And this last one here, right? So all this becomes a little uncertain for a lot of traders, right? Because a lot of this, you can see a lot of supplies here, right? And a lot of these supplies make you feel sort of uncomfortable, right? Having to think to hold price from this low all the way to the high, right? Because now you're facing all these supply zones, and at any point in time, one of the supply zones could, come in effect where they tap the supply and continue price bearish, right? And then you're in an awe. You're probably thinking, oh man, I shouldn't have held price this long here from this low to this high, or whatever, and you're just trying to get out as soon as you can, right? You're maybe catching a 1 to 2, 1 to 3%, and you're cutting off the price here, right? But I'm gonna show you guys how to gain some more confidence to hold price longer, right? Essentially from your swing low to your swing high. So what you do here is, the way our theory works is, okay, whenever we're reaching a major low, in this case, this low, because it's it's a daily low, daily high. In theory, every internal structure should fail, right? This internal structure right here, this is that internal supply, right? All this internal supply should fail, right? Because we're looking at the major structure on the major time frame, right? So in theory, if there's a high and a low here, right, we are looking for price to reverse and continue bullish. Now, hear me out when I say this. Okay, it's not going to be an easy thing to enter here and then just hold it, be so confident to hold price just because it came down to the low, right? What we want to do is, whenever we're entering here, we want to make sure that price, let's say we enter here at this chalk, right? We want to see when price gets to a supply zone, how is price interacting between supply and demand, right? Because essentially there's suppliers there here, right? And there's more suppliers coming now here to fulfill this next sell. What if price came to the supply and pushed bearish like this, right? Now you're screwed, right? That's why what we would do is we would wait to see what price does here and then get this move called an interaction. An interaction is essentially between between supply and demand. So if we have supply coming in, demand coming right in here, right? Demand is feeding more orders to the supply orders, right? Supply could most likely take some of that supply, right? Can take some of that supply and then turn bullish, just like this, right? Now, why would price do this? Well, it's because we know that the major low here is a major demand zone, right? And there's your weak high right here, right? So this is your weak supply, right? Turning into strong demand, right? There's also two ways price moves, which we'll talk about in a second. But just so I could show you guys here, right? Now the price flipped, we call this a flip here, okay? Because, and it's actually a reaction point. This is really the flip. This high here did not break the low, so this is a flip, right? There's failed supply to demand, price comes into something in here and it continues bullish, right? Same thing goes for this. Now that we have price breaking a high, right? Look what it's doing. It's coming to interact with another supply zone. Price will come back to the previous supply or the previous demand, right, and continue bullish, right? Then we have more interaction here to this other supply zone, right? Coming back in here, right? Facilitating this demand zone right here, going right back up to this demand zone, right? So all this is just interaction between supply and demand, right? Now, is this going to happen all the time? Not necessarily, but this is why we draw out each supply interaction zone. These are called supply interaction zones, right? Because these, after the first break of structure down here, after the chalk has happened, what you want to do is start managing price from each supply zone. Is price going to hold at these supply zones? And if they don't, we anticipate the price could reverse, running bullish, right? So here you see the sellers sold, right? Buyers took over. Now we understand that buyers are strong, right? Demand is strong here. That means we're going to be looking to buy here because the institutional order flow started from here. I mean, essentially from here, right? But it continues to do so like this because a lot of suppliers think that prices should continue to sell here, when in fact this demand has been respected here, right? So in theory, all these internal supply here should fail, right? All these should fail, and in theory this low should reach the next high. because if everything is fractal and everything is a low and a high, right, in theory each high should be broken, in theory each supply should be broken, right, because price does this, right, on a constant basis. It has to take out the extreme high, you know, the major high liquidity. It also has to take out the major low liquidity, right, and eventually it'll do that, right. But if prices are bullish just like this, we obviously want some evidence that prices, we want evidence as traders to see the prices continuing to be bullish. So we want each supply to fail like this, so that way we can stay in and hold the trade from this entry right down here, to stay in to hold it all the way to this high right up here, right? We want to be able to do that, right? Now in times, price may not do this. It may not actually give you, it may not react from every supply zone just like this, right? It may not. In fact, it could just simply blow through all the supply zones, because essentially, you know, if news comes in, right, this may be the news, price runs quick, right? When news comes in, price just takes everything, right, and it continues to go high, right? So it may not even interact with any of the supply zones. Why? Because all this is essentially liquidity, right? You can call this a trend line liquidity. You can call it, you know, just each supply liquidity, right? Each individual liquidity, just like that, right? It doesn't matter. At the end of the day, in theory, prices should always break a high and should always take out the internal structure, right, away, because the major structure is key and it's king, right? So that's all I wanted to share with you guys on this theory, right, on this example here. Let me show you guys on the live chart how this works, right? Put this in perspective, okay? So right here we're on the 4 hour. We're gonna go down. We're gonna go up on the daily time frame, okay? Right here, I'm not gonna teach you guys how to do supply and demand. Obviously, I'm just gonna show you how to hold a swing trade. Because that's the purpose of this video, obviously, right? Right here we have a weak demand, strong supply, and the reason why it's weak, because this demand went up, right? It capped at this high right here, right? And this is where it never surpassed this supply zone, right over here. So what we're gonna do is wait for price. Price came down, right? Showing us that we have a weak demand also and strong supply, right? But in this case, we know that the next reaction is gonna be right here, right there, right on the daily, right? So we need to be mindful, okay? How do we hold a swing trade? Now, because everything is perspective, right? We got to make sure that we're taking the trades correctly on the correct structure, on the correct time frame, because everything is fractal, right? So if I want to hold, if I'm looking to enter from here somewhere in this supply zone to hold, I'm not saying you should be holding from, say, to this demand zone or down here to this demand zone. I'm just trying to tell you guys to hold to the next supply or demand zone that you see fit on that structure, okay? Which could be a low or a high, right? So from here, I can already see that price came into supply. And then I'm gonna be looking to sell, right? Because now I've just made my directional theory, right? It's sell. I'm gonna be looking for sells, right? We're gonna go down, drop down to the 30, maybe even the 15 minute right here. And we're gonna wait for price to reach that supply zone. Let's see if it does. It should. Okay, here we go. Okay, right. It's reached the supply zone. Let's go even higher. Hold on one second. Not here. Okay, there we go. That's more like it, because price came here to this area, right? People are trying to sell from here because this looks like a break and retest from all the way from this side. It broke, came back to retest. People are trying to sell. Those guys are taken out. Let's go down on the 5 minutes. And we're going to wait to see how price reacts here. Wait a minute, not here. Is it right there? I'm going to wait for price to develop a bit more here. Okay, here we go. So right over here, I think I already took off. Anyway, here it is. It's right here. I should have looked at this. Right there is my demand zone, right? Because we have a sell to buy, so that's the demand. Then from here, this is your supply zone. So right there would be your entry. So this would be my entry from this area. Kind of went a bit too far, but there we go, right? Now the whole point is, where do we look to target, right? Well, the next demand zone would essentially be here. Let's go all the way down. Let me get out of this. Here's your last sell to buy right here, right? So we would look to target price at this low right here. let's make this just like that, right? Take this demand zone, take our target down to this demand zone. Now, I was teaching you guys, or explaining to you guys, how to hold how to swing trade, right? And how to essentially hold your swing trades longer. And the way we do this is we validate and we look at each failed supply here, right? So when price is going bullish, each demand here should break. It should fail right there. So we can apply these areas right here and mark them out just like this. Because at every supply or demand zone, there's gonna be other traders interested to buy or sell, right? Just like this. Okay. So now what we want to do is we want to validate each area. When price gets to a demand or a supply zone, we want to make sure that price doesn't hold here and doesn't just shoot up against us, right? We want to make sure now, we want to see how does this demand interact with other demand, right? So here's how other demand traders are reacting, right? Because there's a demand zone here, other demand traders are coming in. They're saying this is a buy, right? But we're looking for this to fail. So right here, you can see, just well done and beautiful right here. Demand took place, supply failed. Now this gives me more confirmation, right? And more confirmation to hold price, right, to the demand zone, let alone holding it all the way down to your low, right? Because we're, in theory, each low and each high should break. So let me just zoom out here. Let me just kind of mark this as the target, right? And now that price is leaving off, I anticipate the price should get back to this supply zone, right? In theory, that's what we always do. We always, once a failed demand happens, we anticipate the price should come back on the supply, right? To close the supply zone and then continue bearish, right? And sometimes it doesn't do that, right? Price just has a mind of its own, right? The market is based on an algorithm. We can't always tell when price is going to retrace. We just have to wait and anticipate the price can do this, right? So price took off, right? This gives me more confirmation that I should continue holding price, right? Nothing of this tells me I should cut off my trade, right? Because a lot of people tend to enter there and get their 2 to 3%. So this is about 2% right there, right? And then this is about 3% here, right? It's an average for a lot of people to do this, right? To enter and get 2 to 3%. But I'm telling you, you can hold it based on what other previous failed supplies have happened. I like to call this failed supply because failed supply took place, demand took over, right? So in this area, you can see you can hold it. Let's continue price. Let's play it a bit faster, right? And wait till we tap the next demand zone. Watch how it's going to tap, right? Let's see if it taps. Nope, it's teasing me. There's a lot of inducing, right? This is inducing right here. And look at inducement, right? And all liquidity just built in right there, right? Let's wait to see what happens. Okay, and there's an entry happening right there, right? Boom. Okay, so, and I'm just saying this out loud because I can see an entry here. You can see here, failed demand, right here, failed demand, 2 supply, price reverses, come back. There's your entry, TP down here at least. Anyway, price reaches this demand zone. Now what do we do? Now we need to watch and interact how price interacts with this demand zone, right? Because there's other interested buyers in here that are interested in buying to buy the market, right? But we understand that we've done our work on the higher time frame, that this is a major supply zone, that we need to be selling it here, right? So we can see here we do have a failed demand here. It's quite small actually, failed demand, supply coming in. So we know we're still in the market. Okay, we just hit TP on the demand zone, right? This is to show you that here you can target this demand zone, right, as your final TP. I do this a lot. I don't always hold price at the main low or main high, but in theory you can hold it because prices do go there, right? However, my way of confirming price is knowing that price always comes to a supply or demand, and then it finishes, right? Because there's other traders coming in here that could always interact and take price even higher, right? I don't want to hold the market here and then just come at, not at a drawdown, but sort of sacrifice all the profit that I just made to having price coming up to here, right, and then selling it off. Although maybe other expert traders might say otherwise, right? But here I could say I'm done, I've collected my profit, whatever, right? But let's hold price till price gets here, right? But the way we do that is by watching price, again, from the previous demand zone. Here's your demand, right? And there's your buy to sell, right? You also have this one in here. Let's just draw this one out. This is your next major supply, but this is your internal supply here. So let's see what happens here. Okay. I don't know why price is not playing. There we go. Okay. So this internal supply was swept, as you can see, right? Prices are going higher, sweeping even higher, right? See, this is where it becomes a little on edge, a little weird here, right? Price comes and takes out all this liquidity. Actually, if I just saw this, now I see this on the higher time, that is your supply zone because this did not close. All right, so this would be your inducement right there. So it's inducing us. There we go. So that's your entry. But anyway, it's not about finding the entry right now. It's about showing you guys how to hold price till we get to this demand zone here, right? So far, I see that this low went above, swept the internal high, right? There could be buyers placed right in here, right? And this is the process of elimination. We're holding price to making sure that it does not break this high. If it does break this high, then we're out, right? We collect all the profits from this high, right? But we are holding price and we're looking at price wanting to go bearish. Okay, this low here, try to break that high. Price flipped, we're still in it, more confirmation, right, for us here, more confidence. Here's your next buy to sell. Actually, let me look at it right here. There could be another entry in here, but again, I'm not showing you guys how to enter, I'm just showing you guys where price is interacting so I can be involved into another entry right somewhere in here. Okay, it's very hard for you to see where exactly, but there's your other entry. Okay, here's your other entry there. There's another one here I just saw. And the reason why that's another entry, look, demand, try to raise, go above this high, price flipped, came back in, there's your entry right there. Now, sometimes price can exceed over the supply zone a little bit, just collecting more liquidity, but if you have sort of the, bone structure right, the backbone correct, and, the supply and demand correctly, there shouldn't be any misfaults in terms of how you trade. Okay, so there we go. We just had an entry here, we had another entry here, right? And we're TPing not to this low. We want to TP all the way down here. Let's go back here. Okay, let's see if price can reach this low. Because in theory, prices should reach this low. Okay, this looks good so far, right? It could come all the way here to next. All right, there we go. We just hit the TP, right? So you would have already hit the TP right there. Right now, again, what do we do here? Let's just summarize everything that we just did here. We followed each demand zone on the far left here, right? Looking at these are just as reaction zones to fail, right? Because we have a major supply zone on the higher time frame here. So supply is supposed to exceed demand here, right? And we just followed each demand zone and each of them failed and we just we reacted to them, right? Whether there's a buy to sell, right? There's your entry. Here's another buy to sell. Here's your entry here. There's another buy to sell here. There's your other entry there, right? That's what you do. This is how you do. This is how you trade. This is how you hold swing trades, and making sure they reach to that high or that low, right? And that's how the theory goes, is that, right? All right, guys, I hope you liked this video. Please throw a thumbs up on this video if you liked it. If you had any comments or concerns, please leave a comment on the bottom right down there, right? And let me know what you guys thought about this video. Other than that, I will see you guys in the next video.